the products and the services which ought to be provided to this particular market niche are very unique. You understand?
Yeah.
They're very unique. And it's not only the services and the products and the mechanisms of delivery which ought to have been different, but even the type and the nature of the human resource which ought to provide that service had to be very different from the mainstream bankers. Rather than having a person who's putting on a shirt and tie, you really needed somebody who could simply a shirt, you understand, a t-shirt, okay, and even occasionally put on shorts and so forth. A person who would be comfortable to use a bicycle or a motorbike to approach the clients, you understand. An officer who would be happy to work under a tree rather than a conventional banker who feels without sitting in an air-conditioned office, okay, with a well-structured bank teller slot. You get the point. So it had to be unique. But even after that realization, the day-to-day kind of advancement of the services of the Microfinance Services Company Limited, never was it thought that it would be dissociated completely from the bank. So what has happened is that if you look at it over a long period of time, the appreciation of the mechanisms with which you can provide services to this entity, rather than being cut off and allowed to, or hived off, they have been imbibed and accommodated and comprehended within the bank system. To the extent that today the core bank feels comfortable that we could have a department with these characteristics housed within the banking system.
And that's the way forward.
And that seems to be the way forward. You remain a little bit anxious and thoughtful on whether it will survive over a long period of time, but that is the fact, okay? Because in particular instances where we thought probably you need some simplified kinds of outlets, the research, the study visits to Philippines, to Indonesia, to Brazil, to identify how many service centers and mini branches of these banks are working was basically done by the Microfinance Services Company Limited. But when it came back, it did not argue the case that it ought to dissociate itself and become itself a self-probably running entity, but it worked very hard to make sure that the main bank, the bank CRDB PLC, understands that there's a need for those outlets, and those outlets are fully owned by the bank, CRDB Bank PLC. Okay, so that's why you can say that the CRDB Microfinance, amongst the most successful achievement of CRDB Microfinance Services Company Limited, is to work itself out of a job.
Okay. No.
Researching, articulating new products, articulating new type of human resource which is required, grooming and training this personnel, you understand, designing new products, designing new outlets of different types, without a very big appetite of saying we need to dissociate ourselves, but working very hard with the retail kind of department of the bank, of the CRDB Bank PLC, such that they could be cohabited within the system. And right now, the process which is going on, like moving the staff from the CRDB Microfinance to the retail department of the CRDB PLC testifies my or vindicates my argument that CRDB Microfinance has really been a family member of CRDB PLC, and it has managed. So at the end of the day, amongst big success stories of CRDB Microfinance Services Company Limited, could be claimed to be innovating an institutional, organizational, product and service delivery mechanism which can be housed within a traditional commercial bank to be able to provide the services to the lowest pyramid of a financial market. Okay, these are really in some instances it's financial services to the poorest of the poor in an economy. And I think amongst the difficult stories which you will have to present is that one. Because if you don't manage to present that success story, the conclusion would be like what you sounded out at the beginning, that it seems like now the thinking has to be different, and probably there is some kind of a failure of this institution because it's winding up, the circles are being left to go, and so forth. A simple mind would be that it's not, it has reached its conclusion that it is not possible. But the way I look at it is completely different. The way I look at it is that those methods which have been designed, those products which have been articulated, the caliber of stuff which has been thought of, designed, and developed within CRDB can now be accommodated within the bigger branch and still manage to serve this entity, which is very unique. None other bank, I can easily argue, in Eastern. I've done some bits of work in Kenya, Uganda. I know Arbitrust. Arbitrust is a product, the articulation of Arbitrust very much originated after assessing PASS. PASS is a product, it's one of the recommendations of my PhD, and I've been with it since its inception. Even MESP in Kenya and so forth. Those two are sister organizations which emulated. So I know a little bit. I did the Rural Financial Services in Rwanda. Okay, and I tapped a lot on the experience of, I call it institutional linkage, okay, institutional linkage model of CRDB Bank PLC with the circles, and that is what is being done in Rwanda. Even the Umurenge circles which are being linked to Bank Popular there, that's a kind of a design which I proposed for them, but it was very much a kind of an emulation of what CRDB Bank has done between CRDB Bank PLC, using the microfinance as a vehicle to onward lends to the circles. But it has reached a point that the family, the CRDB family now is very comfortable, and it believes probably it can go directly to the circles, it can go directly to the AMCOs, and it can also manage the mini service centers, it can manage the micro branches directly from the retail department.
But you think the SACO model basically is still sound, and it's something that should be built on and maybe extended even, whereas we've seen the portfolio of lending going to SACOs going down, and there's even plans to further reduce the number of SACOs. So where do you see, do you think that perhaps the model is still sound, but we need to trim it a bit to only have the viable SACOs, or where do you see the SACO model in the future?
I tend to feel the two institutional linkage, the institutional linkage model is still valid. And to me, there are, because even the nature of the economies, the nature of the circles has been evolving, okay? If you look at the natures of the circles around probably 1990 or early 2000, and now things are changing, you understand? And the policy which governs those circles is changing. The nature of the businesses which these entities were doing during those dates has also changed, you understand? But the basic need which has never changed is the fact that within a geographical boundaries of the same circle, they will never be able to mobilize adequate savings, okay, to meet the lending requirements which they have in a manner that onward lending from a corporate bank will continue to be a valid alternative for that. And if for all the circles which are currently being linked to CRDB, whether they are performing well or they are performing badly, believe me, if CRDB drops them, NMB or any other bank will pick them very quickly, because they've already comprehended exactly how to relate with a bank. What I tend to feel is that, and that process can go on, probably CRDB Microfinance Services Limited ought to have invested a little bit, if at all the intention was to maintain that business, was to invest a little bit much more in designing a business relationship model and probably enhancing information technology linkages between the CRDB Microfinance Services Company Limited and the SACCOs. They had already started with the financial services software, but they needed to articulate it a little bit much more better. And then a little bit much more exercise ought to have gone into trying to understand a little bit the economic basis of each SACCOs. It seems as if there's an element of the one size doesn't fit all. If you have one SACCO which probably is community based and another SACCO which is employee based, and you study those two very deeply, it doesn't mean that every employee's SACCO would be very similar. There was a little bit much more effort needed to see the diversity of the nature of the employers. If at all it was in AMCO, in Agricultural Marketing Cooperative Society, there was a little bit much more trying effort and research and articulation. What are the differences if at all you're dealing with an annual commercial crop of high value compared to a perennial crop like cashew, which is of modest value? And what about if an AMCO is for multiple commodities? A little bit much more work had to be done to be able to understand those ones, so as to be able to make sure that you can force contractual relationships with these entities such that the repayment procedure and the NPLs are kept as low as you could. But again, the non-performing loans within that line of business are not necessarily all willful default. Okay, it is not like the SACCOs went to Bizak and decided that they're not going to pay. For each NPL, you could write a long story. Probably you could even write a thesis about it. You go to tobacco, you'll find some governance issues there. If at all there are any SACCOs to which probably lending went to and they're dealing with cashew, this year is completely a unique one. You would have had an NPL, but the reasons are completely different. So to me, that model is still at my heart. I tend to believe that it can work. And I think I have a paper in a savings and development journal. I'll try to dig deep in it and give you a copy and you would read. And I had compared the workings of the two institutional linkage, the institutional linkage between a cooperative bank and SACCOs using CRDB Microfinance Services Company Limited as a case, but also tapping on the lessons which are provided by the Kilimanjaro Cooperative Bank, because they're doing almost the same thing. The only unique thing, the only difference thing is that the Kilimanjaro Cooperative Bank, KCB, all the SACCOs are coffee based, so there is a little bit of a uniformity. Once you learn one SACCO and you design how to do it, it's very easy to apply to the others. Well, if you come to CRDB, you wake up today, you are dealing with tobacco. Tomorrow morning you're dealing with an employee SACCO at the Bank of Tanzania. The next day you're dealing with an employee SACCO of Ngome, which is a military. Okay, the other day you're in Bagala or where you visited today and so forth. So that diversity required a little bit much more intensive learning of those partner institutions and articulating how you would go. And my take with the era we are in, I think I would deploy much more technology. Even probably members to the levels of having their accounts in their telephones and making sure that you monitor all the loans and so forth. So deployment of technology in that system would have resolved a lot of the challenges which have been observed. And I'm sure even what is being happening right now, like folding up all those transactions within the CRDB PLC, the only element which might end up making sure that that process is a success is the deployment of information technology. Okay, so that is one. But another thing I can say, so that is one. It's not an easy, it's one of the most difficult success stories to explain. Okay, CRDB Microfinance working itself out of a job, but making sure that the parent company, okay, comfortably inherits the systems, models, styles, products, outlets, you understand, and expanding its business while not needing this small company. It's a story which you should be able to tell, and you can ask some few more people.
Yeah.
If you direct your questions correctly, you might unearth a little bit much more information in that particular area. And amongst people whom you should talk to probably are the staff of, talk to a few more of the staff in the Microfinance Services Company Limited. I would recommend somebody like Kenja. He's a brilliant guy to talk to. This guy is one of the most articulate. He is not verbal. He is not a person who's forthcoming to tell you anything. But I tend to feel he's very rich with information. That is one at a senior management. But frontliners, there is a young lady called, no longer young because I knew her since when she was very young, but she's pretty senior right now, Vesna.
Okay.
You know, you should be able to get these kind of people. You understand? They will tell you a lot of stories. You should be able, they might not be articulate to telling you this type of a success story, you understand? But if you can pick up the sound bites, okay, and you would know what they are telling you. They are telling you that we have worked very hard to teach this mother company how to deal with this market segment. And now we are happy to hand over the responsibility to the mother company. Of course, the research unit, the Novartis, my friend Gideon and so forth, those are also, because those were the key people whom we traveled with to Philippines, to China, to Brazil, to Indonesia, and looking at their microfinance outlets there and trying to come back and emulate here. They will also tell you that if at all we were to follow those models, probably it would have been a completely different story. But we came back and we adapted those models for the purposes of the land. But other success stories, actually, I am a person whom I'm very lucky. I consider myself a very lucky person in the space of rural finance. At a particular point of time, I was working with, I had different relationships with almost 5 different organizations, which all were working towards enhancing market access in different ways. I worked with PAS, Private Agriculture Sector Support, chairing that one. I have a relationship and working relationship acquiring the chairmanship with Africa Guarantee Fund. This is AGF, it's another, the NIDA has put money there. I was with CRDB for some time with the PLC board and then moved now. But I also worked with FSTT, the Financial Sector Deepening Trust, you understand. And on and off consulting for BOT for purposes of market, access to finance issues. Amongst guinea pigs of how to enhance access to finance, okay? Whether it is through physical units, whether it is through mobile banking systems. Mobile money, you can take the telephony companies have had a very good lead, but also mobile money within telephones, CRDB Microfinance has also contributed in a way. But in terms of also human resource capacity development for that, for market access and outreach into the rural areas, okay, linking a major core financial institution, CRDB has done a huge job. And its success should not only be assessed by what CRDB has managed to do in terms of the savings, but how many things are, how many interventions, how many innovations, how many kinds of service provisions mechanisms, how many products were initially put in place by CRDB Microfinance Services Company Limited, but immediately after that taken up by other banks. Multitude of them. A multitude of them. Mini branches, we were the first one. Okay, I can say mobile vans, not mobile money by virtue of using your telephone, but vans which would really go to a very rural area and provide services, etc., and link them to the, not to a microfinance services company limited, but at least at the end impact on the deposit mobilization of a cooperative bank. You get my point? CRDB was the first one. Mini service centers, CRDB was the first one. Agency banking, CRDB was the first one. But immediately, not even after 1 year, it was like wildfire. Every other financial institution took it up.
Yeah.
So to me, the success of CRDB Microfinance Services Company Limited, it is very easy to try and study it within CRDB, but to me, I think there is a bigger story than that. What impact has it had in the financial services terrain in the country? It is really, really a significant one. And it is an easy thing to forget. Once you see agency banking and those small outlets out there, it is very easy to be tempted to feel it's a general revolution in this country. But the guinea pig, okay, was CRDB Microfinance Services Company Limited. CRDB Bank PLC definitely invested a lot in that one, and development partners of different nature, IFC, Danida being the lead, and also other partners like I can say MicroSave in terms of technical expertise contributed. Their studies are very informative, which they have done for CRDB, etc. But really, it took the courageousness of the CRDB Microfinance Services Company Limited management to go out there, okay, and try things, tweak, burn fingers, make mistakes, get it right before probably other banks in the system. So I'm trying to choose those success stories which probably might not be the easiest ones for many other people to tell you.
Yeah.
And Sostenesque probably might have sounded out a little bit about that because they invested. I think there was a grant and a loan combined to CRDB PLC for trials with regard to mobile mini vans, banking, and also some of the mini service centers which were established, etc., were benefited from grants from the financial sector, depending trust, etc. But the assessment of how successful that was should never be done within the context of the bank itself. Somebody should also open the eye.
Yeah.
What has this done to the bigger picture of the Tanzanian economy? And they can easily see it in the Tanzanian economy, but I never know. Probably some lessons have spilled over to Uganda, to Rwanda, and so forth. Okay, so that's the second one. I don't know whether it is something which you have thought
absolutely.
of or not. Okay. But also, I tend to feel internally, I was in the board of the CRDB PLC, and I've also been in the board of CRDB Microfinance Services Company Limited. Believe me, there are quite a number of good governance kind of procedures and so forth, which have been experimented probably at the Microfinance Services Company Limited, but they have permeated and being deployed across the bank. And let's say, for example, the things like risk mapping, okay, risk management systems, and the risk monitoring at the board and top management levels. A lot of experimentation was done at the CRDB Microfinance before being adopted at the other entities. Experimentation with regarding to having very unique products like insurance, okay, and tying it very neatly with the transactions which the very bank is having with its clients. You understand? That's an innovation which was experimented, tried, perfected, until it worked very well. The guinea pig again, the experimenter was the CRDB Microfinance Services Company Limited, you understand, until it worked and it was constituted as a company and made as a separate entity, and it's growing. Sooner or later, you never know where that insurance company will go. But all this is a product of having this small company where the leader put money, you understand, to experiment how do you serve best the lower echelon of the financial sector pyramid, and allowing it to burn fingers, to try things and so forth, etc. And all these are coming out. So the insurance story is a story 110% sure, a success story of the CRDB Microfinance Services Company Limited. And what else should I say? So probably those are the three kinds of dimensions of the success stories which I would have wished to bring up to light. Yeah.
But would you agree that I mean the SACCOs now face different challenges than when you started the SACCO model, so to speak? That there are more competitors picking up your SACCOs. Some of the members are getting too rich and attractive for banks. Banks on the other side are going down market or catering to lower segments that they were not interested before.
Definitely.
So it's a more competitive, it's a more fragmented. You have to be careful also now that you don't end up with the bad SACCOs and your competitors steal the good ones, so to speak.
I can't argue with you more than that. I think you've got it right.
Yeah.
The terrain has changed. It's not the same terrain like it was probably 15 years ago. Things have changed a lot, and what you're saying is right, but I tend to feel also the cake is still very, very big. You understand?
Yeah. What about those who are unbanked now? You think the SACCO model will work for still the poor segment that still are excluded from financial services? Will the SACCO model work for them?
The biggest competitor the biggest model competitor would be the mobile money, meaning the telephony one. You understand that the information technology might be able to enable the corporate banks to bypass the need of a sub-institution on the ground to reach the ultimate beneficiaries. Okay, so that's the only challenge. But it is yet to be seen how well and what is the range of the services that a corporate bank can provide to those entities using the information technology and a mobile phone kind of a model. And are there still some other products which require probably to some degree the conventional walk-in kind of an office space like a SACCO premises to be able to be served?
Yeah.
But I tend to feel the conviction among the many banks is that probably right now the way to reach the lower echelon of the market pyramid is to use telephones and so forth, information technology, etc. But I'm sure down the line, not very far from now, you might quench the whole of the services which you can deploy using the technology, and then you still find yourself that there are quite a few more which would still require walk-in services in particular rural areas. And for those particular services, in order to link a corporate bank like CRDB or NMB or NBC, you would realize that probably a two institutional linkage, model might continue to be something to explore. Definitely, you can't wake up today and then go and establish the same linkage and contractual relationship like what we did some 10, 12 years ago. You will have to think of it in a slightly different way. Yeah.
Professor, let me throw a spanner in the works. And some of this may not necessarily be directly going to the impact story. It's to help us actually define that impact story properly. And I like the fact that you have expounded clearly the story going beyond what people call impact in terms of the stories being told into what may actually not be captured in terms of what profound impact something that I did without intention ended up. For example, the exclusion factor where people thought CRDB, bank and microfinance seems to be making money and they could be having a competitive advantage here for no reason for us, so let's go there, where they would not have gone unless you are there. And of course now the other contributions before you can actually go there, as you said, a lot of experimentations was done, a lot of investments were done, while others just went there when it was already. So I like that thinking, and I think that part, and also how seeing it now, bringing a bank now to actually think that I can do that business. I think that part of the impact, you make it very well, we won't lose that one.
Okay.
Now, the area that I would want us to interrogate now, probably just to make our minds think properly, is while that is largely the case, one is there are doubts as to whether either this integration is premature or whether there should have been another format of integration. And the reason why I raise this is that first, within the restrictions of a regulated commercial bank, one wonders whether the bank will really have the capacity to not only continue the dynamisms of serving that market, but also whether the flexibility to do what you call the innovation, the experimentation will be there. And even giving the example of the CRDB microfinance tried this, including the insurance agency, the agency banking, and then they were taken. Once that department is absorbed into the bank, who will continue making this business competitive by doing those trials? That's one interrogation that one wants to think about. Number two, I don't think the market is mature to the extent that one can say you don't need this separate continuation of experimentation. And one of the reasons why I'm saying it's not mature is you've already said that will mobile banking be the main competitor? Will they innovate products that can reach the poor? Now, another area that shows the market is not mature is what we have seen. The circles are going through some kind of a crisis. And that crisis, we don't know whether it's because the CRDB microfinance is in the process of being integrated or why. But in that crisis, the mother of circles, who we can say in the industry is CRDB microfinance, is absent. The circles feel neglected. The few we have talked to, they feel neglected. They feel they are not responding, and the microfinance doesn't see like that's a big deal. So the question would be the circle sector. What is its future, given that CRDB microfinance invested so much effort on it? A lot of the players who came in, and I must say we haven't really researched enough, seem to have come in to capitalize on the effort that were made by CRDB microfinance, to the extent that if CRDB microfinance pulls, the rest are likely to pull even faster, because if CRDB microfinance is not with them, who can really want to be with them? Mm-hmm. And then finally, even when you discuss with the staff, you don't get the proper understanding whether there is integration into the bank or not. Because I think there is also another concept which we have not yet read about the future of the microfinance, but we are getting that it will be integrated. So my question, I think, to summarize that, my question is, do you think that it's the right move to completely integrate this guinea pig into the bank and cripple, and would that not really leave the bank vulnerable in terms of remaining competitive in that market? Particularly if a major competitor decided that, listen, the best way to serve this market is not to really do it in the CRDB model, but to keep an arm that creates a business and brings it here. continues that, when we have a problem like the SACCOs, and now we can go and ask them, what is the best way to do these SACCOs at the moment so that they can remain our part of our business model? That kind of thinking, I'm wondering whether we will lose that one, and whether or if maybe there's a thinking that there will be another version of the guinea pig will be maintained, so that you're not completely left after of that.
My quick response is that I think the genetic makeup of CRDB is strongly embodied with the abilities to serve that market niche. And I also am very convinced that for a foreseeable future, probably for as long a period as which the CRDB microfinance has been alive, CRDB can continue articulating and serving that market niche. Okay, just by winding up that particular unit, you are not wiping out that ability within the bigger bank. You understand? Human resources there, models and systems are there, structures, the models of contractual arrangements with the savings and credit cooperative societies are there. You understand? Even personnel which was doing that particular job is still there. So I'm pretty confident that the retail department within the CRDB microfinance, within the CRDB PLC, can continue doing that seamlessly, and even the partners down there might not feel that we are now talking to somebody very different from the ones who were talking to us when CRDB Microfinance Services Company was there. You get my point? But that is one thing. Another thing is the fact that truly, right now, I don't know, I'm afraid to call it a fad, okay, FAD. But really, right now, the most topical thing and the most appealing kind of the next generation of how to enhance financial services, access to financial services, and to penetrate to the rural areas is fintech. Is financial technology kind. So I can see that what I foresee is that CRDB PLC can easily continue doing what the CRDB Microfinance Services Company Limited was doing in terms of market access by deploying grassroots institution using the retail bank department, but quickly put together a fintech portfolio, okay, to take the space which was being occupied by CRDB Microfinance Services Company Limited, and then pursue the new approach which is believed by many that that's the next. This is the current generation's kind of methodology, okay. So a fintech with all the deployment of information and technology, and a very mindful kind of leadership to make sure that it is not done, fintech is not pursued simply for the purposes of achieving that technological advancement, but with a mindful navigation that one should successfully penetrate the rural area and the underserved population. Okay, so putting up a fintech is easy, but putting up a fintech with a clear articulation of how this fintech will penetrate the rural areas and will serve the disadvantaged requires a little bit much more energy, much more thinking, and much more deliberate cooperate kind of direction and governance to make sure that that is achieved. The elements of that are already in place. Okay, because I do understand that even the winding up of the CRDB Microfinance Services Company Limited, they reached a point, do we convert this into a fintech? You understand? But my assessment is that there is so much backlog and there is so much dead wood in there to an extent that simply transforming one special purpose vehicle to another might not work. My suggestion would be wind it up completely and then reconstitute it from governance, technical expertise, senior management, and so forth. As a fintech, the only thing which you need to be careful about is that the mandate, the design, and also the emphasis in terms of what is it supposed to be achieved is clearly stipulated that we're doing fintech, but for purposes of serving the underserved.
Sense. I like that part of it. That
we're also a bit critical on these aspects.
yeah. Particularly because the conflicts within what he started actually, the conflicts within a pure commercial banking in terms of understanding that market and how to serve it, and also the cultural, the mindset of the traditional banker can easily overwhelm the microfinance specialist, the extent that you are not given the space to really push that market. But if it is understood that there is a market that might not really be served within that arrangement, and that an alternative vehicle is being created for that. And I like what he said, that the thinking of an alternative vehicle in terms of the business model, in terms of the visioning, the systems and structures would be so fundamentally different that trying to say we are transforming this to do that might actually be dead on arrival. It may be the worst mistake people could make. But when you start it afresh, then you are not fitting what you have to the market, but you are creating what the market needs. But I think there will be, this is really outside our mandate. There will be real issues of how to integrate this microfinance thinking without not allowed to be swallowed. Of course, the bank has an interest and they wouldn't want to lose that market, because why would you want to lose it to a competitor? But
going back in history, Danida both made a capital investment in '93, I think it was, during the privatization process, but also provided technical assistance. I think there was a deputy director at one point, a credit officer, and also short-term technical assistance. Many have criticized Musungu technical assistance sitting here, and it undermines ownership and it undermines capacity building in the long term. It seems that this technical assistance has somehow avoided that. How would you characterize the effect and impact of this support from Danida?
The only very unique thing which I observed at CRDB Bank PLC is that I'm not very sure how that was achieved, but all throughout, whenever I have come across, I've worked with, or I have interacted, or I have had to observe technical assistance at CRDB, I really have sensed a lot of effort to place that technical assistance with full answerability to the local management. I think I'm cutting short a very long story.
Yeah.
You understand? You have a DMD who is there. Look at his job description. Who are you answerable to? MD. And the MD is a purely Tanzanian, probably one of the shareholders of the bank. You get the point?
Yeah, sure.
You have, let's say, probably a credit expatriate who is placed under the credit department. What is his responsibility? They are articulated, designing new products, articulate how to penetrate, increase the portfolio of lending to this particular segment. Whom are you answerable to? 100% to the director of credit, who's purely Tanzanian, grounded as an employee of CRDB. And he doesn't have any mandate, probably, to contact the managing director, and he has limited the scope and influence to influence other staff, or probably if at all he has been given subordinates, it is 2 or 3 who are answerable to him. And many times it has been people to work with rather than people to dictate and supervise. You get my point?
Yeah.
So simply I tend to feel the nature, structure, terms and conditions and the modus operandi of placement of experts within CRDB from Denmark has been really ones which have enhanced rather than dilute the full control of the local management system. Having said that, it is not without full appreciation of the expertise which they were bringing in. You understand? Expertise which they are bringing in, knowledge, okay, constructive advice. I do remember people like Dave Monk and so forth. These were really hard kind of bankers. And if you go to the governance levels, I have lived at the corporate, at the bank PLC with something like 3 different board members from Denmark. But never did I ever sense inferiority in front of either of. We were equal at par. We were peers, and we ended up being able to differ on opinions, and each one stand on his own kind of belief. But also, I should say the truth, many times there was convergence of ideas, there was hybriding of ideas from what was coming from Denmark together with Tanzanian. I also sensed a lot of respect and recognition of the context specificity and the local knowledge which Tanzanians are bringing on board, whether it is at the board level or management, despite the fact that probably the expatriates would have had suggestions of how to do it better. They were ready to be flexible in a way that the new ideas which are coming from abroad were blended together with the rich local context knowledge which was harbored and carried by the experts. It is very difficult for me to say exactly why that happened and whom should I give credit for that. But I, having worked and observed Danida at PAS, at the private agriculture sector support, having worked and observed Danida's behavior and operation within the Africa Guarantee Fund and also at CRDB, I think the articulation of development intervention by Danida is pretty seasoned and well grounded right now, with naturally a lot of respect for the local content. You get my point?
Yeah.
So it is in the genetic makeup of the Danida aid approach, okay, rather than believing that somebody is coming in with full 100% knowledge and imposing on ideas. I think there is a lot of willingness to support, cultivate, and promote local knowledge, okay, respect local professionals, but mindfully at every point of time be able to point out very blatantly, okay, this is a better way of doing things and so forth. And it is done in many subtle ways. Sometimes it is done by way of directly interacting with the local people and telling them this is not how things should be done, warning and alerting that this could be wrong. But I also like the blended kind of initiatives like the